get more assessment on all those numbers now, let's go live to Oman, and I can speak to Jameel Ahmad, who's the Chief Analyst at GTC. Welcome to you. Let's start with those numbers on wage growth in Japan. It's great for workers. How does that impact, though, the central bank when it comes to setting interest rates?
Neil, this is the interesting question exactly, because the Bank of Japan are known as the bank that are playing poker face, but really don't want to play poker face. Because if you look at the statements that they provided over the past couple of months or so, they're indicating caution against the market expecting higher interest rates in Japan. But at the same time, Japan's actually the only economy right now that's seeing higher inflation and actually has successfully battled decades of deflation. So Japan's actually achieved its economic targets. And as such, investors are rightly saying that Japan needs to start normalizing monetary policy. Now, interest rates in Japan have not been above and to 0.5% since the beginning of this century. And now we're getting to the point where if the Bank of Japan actually raise interest rates one more time, we're going to be hitting those milestone numbers. So more data like this is going to put more pressure on the Bank of Japan, even though they will still not want to give any more cards away at the poker table.
Let's have a look now at China, which is proposing interest rate cuts. That's great if you've got a mortgage or if you're thinking of buying a house, but there will be a broader economic impact. How would you assess that?
So in China, the property bubble and that sector is really under the watch list right now. And you can see why, because if you look at the data, up to 70% of Chinese citizens have their wealth in some sort of housing or property sector. At the same time, we also see from Chinese economic momentum that we're starting to get less optimistic that the government GDP targets of 5% will be achieved as sustainably as maybe over the first half of the year, where the data was picking up. I give you an example of the most recent manufacturing PMI that came in on the past weekend. We actually saw manufacturing decline and contract for the fourth straight month. That would be a number below 50. The better news is that the non-manufacturing PMI for sectors in such as artificial intelligence, technology, and so forth, they're showing growth. But China's been known as a manufacturing powerhouse now of the world for pretty much the past 15 to 20 years. So it's going to take some time for those tables to turn and for investors to be more optimistic on China, because deep down it's very reliant on manufacturing goods, even though it's trying to transition its economy strategically away.
We saw quite a sell-off in the last few days, some big companies losing up to as much as like 10% of their value. How do you think these numbers we've just talked about will impact that?
Yeah, it's again concerns about economic momentum as we're heading further into the second half of 2024. We had a lot of optimism built into the market. Again, if we look at the S&P 500 as just one example, it hit as many as 30 all-time highs, that's 30 over the first half of the year. That was also based on lower interest rate expectations and the impact lower interest rates would have on economic data. Now, truth be told, it's going to take a long time for lower interest rates to actually feed into the economic data. And if you're talking about the US Federal Reserve and the US market specifically, we actually still haven't had an interest rate cut, despite the market wanting one now for more than 9 months. So I think investors are also taking profit and accepting that some things have already been priced into the market.
Jameel, pleasure speaking to you. Thanks for your analysis. That's Jameel Ahmad, Chief Analyst at GTC.